Hello and welcome to Share Views, brought to you in association with London South East. My name's Ed Boucher, and in this edition we're going to get an update on what's been going on at TransGlobe Energy. And to help me do that, I'm joined now by Randy Neely, who is the president of TransGlobe. So Randy, welcome to Share Views.
Thank you.
So I met Russ Clarkson, the CEO of TransGlobe, about 6 months ago. What's happened since I met Russ back then?
Well, in the past 6 months, we've, I think, brought our production back up. It had been waning a little bit through the summer as we had some difficulties in Egypt with service rigs. We brought it back up to in the 15,000 barrel a day range, combination of Egypt and Canada. We did have some disappointment in the Western Desert. We had a well that we were hoping would be successful on Borak Ridge. It turned out not to be successful, so that was a bit of a disappointment. But we did have an offset, success in Canada. We drilled 3 wells. We had drilled them in the third quarter, but we completed them in the fourth quarter, and they all came in really at or above expectations. So that's been a nice success. Third quarter report was, looked very good. We had about 19 million in cash flow, and fourth quarter should look similar to that. So overall, the company's going quite well, and we're quite happy with where we are today.
And if for anyone who didn't see the video 6 months ago, perhaps just a quick summary of what TransGlobe does. You're producing in both Canada and Egypt, is that right?
Yeah, that's right. That's right. We have 2 primary focuses of operation. Egypt has been a part of the company for over a decade now. And we produce there about 13,000 barrels a day, all oil, all onshore. And in Canada, we had been in Canada years ago, but we came back to Canada in 2016, right at the end of 2016. And we produce about 2,500 BOE a day. It's a combination of natural gas liquids, and oil.
So how much oil have you got in Canada and Egypt that you know is there, and you can get it out of the ground economically and sensibly?
We just actually put out a reserve report, updated reserve report last week, or actually maybe it was earlier this week. It shows about 46.5 million barrels BOE again, mostly oil.
That's barrels equivalent.
Barrels equivalent, yes, and that's a translation of gas from a 6-to-1 basis. So 46.5 million barrels split between Canada and Egypt, probably about 60% in Egypt, 40% in Canada. And yeah, that's probably worth, I think our NPV 10 on that is $335 million US.
Okay, and what's your market cap at the moment then, roughly?
About $100 million US.
Okay, that's interesting.
Yes.
Well, okay, that's quite a big divergence then. Why do you think the share price, the market cap, is a long way below the value of your reserves?
Well, I think it's a combination of things. I think principally what we've seen is over the last 4 or 5 years, North American investors, who's principally been our investor base, have gone away from investing in small cap international oil and gas stories, and mostly been now started to focus on Permian stories in Texas and whatnot. And so we've been now starting to spend more of our time over here in the UK and in Europe and in Middle East and in Africa, trying to tell our story to folks that we think would believe in that story and not see the risk in the same way that the North American investors see it.
Now, I gather you're considering listing in London. Is that why? To get more exposure to investors outside North America?
That's right. We are considering another listing outside of North America, London being a primary location where it would make the most sense. And that would be to attract the investor base here that wouldn't otherwise have access to us.
But does it also suggest that you're going to need to raise money from new shareholders as well? Would that be another reason for the listing, the secondary listing?
Actually not. I mean, the company hasn't raised money since 2011. We really live out of cash flow. Our primary driver is to grow the company through cash flow, and we think that returns the most to the shareholder. However, if we do see an opportunity to expand through acquisition and we have access to capital in the UK, certainly we would look to raise money over here.
And let's look at your development and exploration work. I know you're not just a producer, you're still looking for oil. How much of your development work is relatively low-risk development work where there's a good chance it's going to work out? And how much is sort of the higher-risk exploration work where there's bluntly a strong chance that it will fail?
Yeah, the company has, for the last several years been mostly focused on development, exploitation work. We split our budget about 70% to development exploration, about 30% towards exploration. We would not consider ourselves kind of big E explorers. We don't explore offshore, it's all onshore. All of our wells that we have planned for the current year are in the range of $2 to $2.5 million per well. So while the potential outcome is risky in terms of, you're right, they're exploratory wells, they're, at best case you're 20 or 30% chance of success. The worst case that you drill them are probably 10 to 15% chance of success. So they're risky from that perspective, but from a balance sheet perspective, we don't see them being high risk. We're spending about $12 million this year on exploration in 2018, and we're probably spending in the neighborhood of 28 or 29 million on development. So that's principally good, and we don't plan to change that strategy. We plan to really focus on development, but you still got to explore. You still got to find oil, and hopefully you find it, and then hopefully you can develop it, and that turns into your low risk part of, or adds to your lower risk part of your portfolio.
Now, we talked a bit about the share price, comparing it with the assets that you have, but also, we need to look at the oil price as well. The oil price has clearly recovered a lot over the last year or so. I don't think the TransGlobe share price has moved up as much. Why do you think that is? Is it something to do with the nature of your business, or?
Yeah, it's a great question. We definitely have and continue to lag the recovery of the oil price. We have seen oil prices come up probably, 50% in the past year. Well, there's been low points in there, but definitely at least that much. We haven't seen our share price recover really at all. I'm not certain where that is. We do sort of point to, again, that our investor base in North America doesn't have an interest in these smaller cap explorers, producers, anywhere from an international perspective. And we think, again, we have to try to get the story out to a broader base that would be willing to take that investment risk, which we see as being relatively low from our perspective, but from a North American, I can invest in Texas perspective, they see it as being high.
And so in your recent third quarter results, did the rising oil price impact on those results, or was it a bit too early for that?
A little bit. In fact, we probably had a little bit more than you would have expected over that period, because we had we sell our oil out of Egypt principally in tanker liftings. And
Right.
it's sort of, when that tanker happens to go is when you will get the price, because we sell generally based on the month, the average of the month in which it's sold. So we sold a tanker lifting in September, and September was on a relative basis stronger than July and August. So yeah, we did get a little bit of impact from that rising price. We look at 2018, we budget 2018 based on a $55 Brent, and we know that today we're at, almost $70 Brent. So it's a lot of leverage. In fact, there's certain, parts of the analyst community who would say that we have one of the highest torques to increased oil prices of small cap companies out there.
But I guess that potentially makes you vulnerable if it goes below $55. Could you cope? The oil price has been very volatile over the last couple of years.
Yeah, no, another good question. That's what happened over the past 3 years. One of the things that the company prides itself in is that we operate all of our properties. And because of that, we have the ability to turn off the spending taps. And that's effectively what we did in 2015, 16, and 17, is we effectively just tried to maintain a reasonable level of production and meet all of our exploration commitments that we had with the government. We did that. During that time, we also dropped operating costs, dropped G&A costs, really worked hard on some of our capital programs in terms of what we can drill wells for. And so we've now positioned ourselves to come out of this downturn very, very well. And if we do see another downturn, we do the same thing. Lay down the rigs, go into a bit of a hibernation mode and conserve capital. And that's why, the company's been around for over 20 years. And the reason we are is because we run a very, unleveraged balance sheet. We don't take a lot of balance sheet risk, and we control our spending because we don't have partners telling us that we have to spend when we don't want to.
You don't work with partners at all?
Currently, we have no partners in Egypt, and in Canada, we operate about 88% of our properties. We would consider working with partners, but it have to be the right partner.
Because that's a relatively unusual model for a company of your size. Normally, you find the oil, you then get a big partner in, and the big partner spends the money on the development work, and then you just have a cut from your earlier stage exploration.
Yeah.
Why do you do your model?
Well, I think if you are going for big exploration, and it's going to cost you 10 or 15 or 20 or $25 million to drill a well. Certainly you want to lay off some of that risk. We don't take that size of risk on the exploration program, so we don't need big partners to come in and spend the money. I mean, if we make a major discovery and it has a big development cost ahead of it, maybe we would consider it, but we don't have anything like that in our portfolio as it sits today.
Randy Neely, President of TransGlobe, thanks very much for joining us today. It's been good to speak to you.
Well, thank you for having me.